Hello, everyone. This is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today, we're going to talk about should you get a loan from a mortgage, from an actual bank, right? Or should you get it from a mortgage broker, what they call, because that's a difference, right? Banks normally have what they call loan officers. All right. And then you also have what they call mortgage brokers. So which one should you go with? We did kind of a mini video on this not long ago, and that was just during the pre-approval process in general. But here's why some people like the options and some people don't like the options. So let's go straight into it. So what does that mean when you're getting a mortgage from an actual bank? Okay. There's 1,000 banks out there. Some are online only, some are online and in person, and some are, of course, they're in person as well too. Okay. So when let's say, for example, you go to Chase Bank, they have their parameters on what they're looking for to get a mortgage. You talk to their loan officer. That's what they're called. Their loan officer, mortgage loan officer, whatever, mortgage broker. Well, no, I'm sorry, not mortgage broker. We'll get into that in a second. Either way, you're talking to the loan officer. They're going through the entire process with you. You get pre-approved. You find a house you want. You go into contract. This is where it gets fun. Now, when you're doing that, you have what they call the underwriting process. It's essentially a group of people behind the doors, behind closed scenes, right? Behind closed doors, behind the scenes. And what they're doing is they're pretty much double checking everything. They're making sure that everything is going right. They're making sure that they're minimizing the most risk. They're making sure they're running you through a platform called Fraud Guard. We did a video on that. That's essentially looking for things that may not show up on your credit report. Yes, they're looking for things that may not be on your credit report that still exist, like student loans, bankruptcies, mortgage fraud, having two FHA loans, all type of stuff. People being on, people owning property, but then them not telling what they're doing. People maybe that may be in a lawsuit and they said they're not in the lawsuit. They're just double checking certain things. And the underwriting team is, if you're going through a bank, then that same underwriting team, there's about a 95% chance, because some banks do offload some of their loans depending on the scores or whatever the case may be. But for the most part, most of the banks do majority of their underwriting. So that means that the response is going to be quicker. Your closing is going to be quicker. That's because there's better communication in most cases. Okay. Now, I would recommend, if you're going to go through a mortgage, if you're going to go through a bank, try to go with someone that's local to you. It doesn't have to be like the small bank that's like the credit union or something like that. Those are great options as well, too. I'm not knocking those. I'm more so talking about the ones that's like local to you. Like, I've seen people go through a bank, but then the bank, they specialize nationwide, and they're really online. They really don't have a branch, right? The problem with that is that the underwriters are not sure how things may go in a certain state. So sometimes that could cause a delay. So if you're going to go with, again, a bank, go through someone that you can walk into a situation, if you want to do that, or at least go into a situation where they at least specialize locally to you. Not saying, hey, oh yeah, we could do business in that state. No. We always do business in this state because we are here in this state. Does that make sense? All right. So that's what I would recommend for you. Now, another option is going through a loan officer. I'm sorry, Jesus. So a loan officer is what we just talked about, okay? That's what they represent. Typically they represent one brand, okay? Then you have what they call a mortgage broker, okay? A mortgage broker is where they're going to give you multiple. They usually don't give you options. They usually shop your application around, and they really try to find out what's going to give you the best terms. But you better believe they got bills to pay too. So they're going to look to see how they can kind of control the numbers on the back end. For example, you may have to put more skin in the game. Usually mortgage brokers they step in a lot more when people don't have the best credit. Okay. So when they're in that 520, yes, you can buy a property if you have a 520, you get a mortgage loan if you have a 520. So if you're as low as 520, by the way, expect to put 10% down, by the way. So if you're between 520 and let's say 620, that's usually where most mortgage brokers spend a lot of their time for trying to choose which the bank is going to be the best. And the reason why that is because you have what they call a secondary mortgage industry. We kind of talked about that as well, too. That's essentially where you start off with one bank. Your loan is starting off with one bank, but then it eventually gets sold. There's nothing you can do about it, right? We already kind of talked about that. There's nothing you can do about that. However, when you go through a mortgage broker, things may take a little bit longer. Why is that? Because the person that you're talking to and the brand that the mortgage broker represents is usually not the same underwriting team. So sometimes that causes delays, communication. Sometimes they're not familiar with how they do things in the state. But the biggest thing is usually how well they respond and that communication, what they need. And sometimes what they need may change. So for example, if you're working with a bank it's the same thing all the time, right? Because I'm noticing this as a real estate agent. When I have a lot of lenders that we work with, but one particular lender, everything's straight shot, right? If it looks this way, it's going to go this way. If it looks this way, it's going to go this way. That's simple. But then you also have, the mortgage brokers that I work with, where, it's you never know how things are going to go because it just depends on who's taking what deal. Now, don't get me wrong. There's a lot of banks for them to choose from. However, those particular banks try to move numbers around and say, okay, for us to make this number work, we got to move this, got to do this, got to do this, got to do this, got to do this. And it ends up taking forever. I've literally seen deals that were clean. I'm talking strong credit scores, money in the bank, income was perfect, like over six figures, and they were making just random stuff up. It's almost like they didn't want to close the deal. This is true stories, like last week. and again, using a mortgage broker. So I'm gonna be honest, using a mortgage broker is slightly more riskier as far as the timeliness to close a loan, assuming they can close the loan, because something always pops up, and this is what I call popping up. Because the mortgage broker may not, depending on how much business they do with that person, but they can't control what that person is going to ask for. And it's always random stuff that they may need, and you never know what they're going to need. And it just goes down a path like a rabbit hole of, damn, you always need something, right? Versus going with a bank. And both, don't get me wrong, both are banks, but versus going with someone who's a loan officer where it's the same kind of deal all the time, you're better prepped for something like that. And your loan is more than likely going to close in 30 to 45 days versus working with, a mortgage broker where it could be taking a little bit longer. Now, I know y'all finna go crazy in the comments, and I'm sure some mortgage brokers are probably in here saying, Calvin, you're hurting the industry. I'm not trying to do this. This is just the truth. You guys know this, right? First off, if you're really in the industry, you know what this is, right? And so that's just how it's going to be. It's all about setting expectations. It's all about setting expectations, because at the end of the day, people are trying to get paid. Now, don't get me wrong, there's most definitely some great mortgage brokers out here, great loan officers out here as well, too. And they mean well. But at the end of the day, people trying to get paid. And, sometimes people are not all about relationships, so they're going to try to hit you over the head with stuff you're not going to know. This has happened all too often. So if you got a question, ask the question. If you don't feel comfortable, go to another place. Again, you are the it factor. Always know that. Now, we love sellers. We love buyers. But in my personal opinion, buyers are the ones who shift the market, because sellers can sell whatever they want to sell. And that's always, don't get me wrong, it's going to be low inventory like it was recently. But a seller can't sell to themselves. So they're going to say, no, the buyers control. Nobody gets paid unless the buyer signs those agreements. Now, don't get me wrong, the seller's got to sign agreements too. But damn it, that's how we got here, because the seller wants to sell this particular property. But if the seller doesn't want to sell that property, the buyer can just go to someone else who will sell who will sell a property, okay? The buyers are the ones who control the industry. That's just my 2 cents. If you like this video, like it, you want to share it, and be sure to subscribe, as we got nothing but great content on the way. Thank you all so much. Have a great day.